Hello traders, Gary Wagner here. Just about 10:15 in Honolulu, 3:15 in New York. It is Tuesday, December 15th, 2015, and this is the Daily Report for Gold and Silver. Traders, as far as the precious metals are concerned, we do have a fairly quiet day. Of course, anticipation as the FOMC meeting, the last one of the year, had begun today. Press conference will begin tomorrow, in which they will announce or not announce, although all bets are on announcing, liftoff and the first interest rate hike in over a decade. When we look at gold, it's currently trading, call it 1062. It's 1061 and change. We've seen a trade to a low of 1058.88 and a high of 1068.78. So as you can see, we're closer to the low than we are to the high. Now, when we look at silver, silver is also trading higher. That was under a lot of pressure when you consider the fact that it broke hard below $14, and it has not been below $14 in quite a few years. Unlike gold, where gold is hit a all-time low and then moved up off of that low, silver has hit these lows and has not moved up off of these lows, but we're still sitting 1377, the high 84, the low 65 on the day. So traders, interestingly enough, now we are looking at a daily chart of gold, and as you can see, it's absolutely closer to the lows of the day down here than the highs. But you have to take into account what is going on with the US dollar. Of course, in anticipation of a rate hike tomorrow, you actually have gold trading about $8.30 higher this morning. And when you add in a strong US dollar, you've got to subtract about $6.80. And that's what's giving us this $1.50, $2 rise in gold right now. It is really being tempered, so to speak, by the US dollar. So traders, we touched upon this a little bit yesterday, but I think that as we go in towards the end of the year, and we look at not only this trade, of course, we are sitting short at 1078, stops at 1088, market trading at 1061. But as we go into the end of the year, we really want to talk about, I believe, how important this current area that gold is trading at is at, because I think we are at an absolute critical area. We talked about this a little bit before. I've got two fib retracements, one very long-term retracement starting at 250, a second retracement which starts at 540, all of them concluding up here at the top of 1980. When we do that, we get a 50% retracement at 1084. That's of this very, very long move. We get a 61% retracement at 1065. Currently, we are trading under both of those points. But when we look, I don't want to cover this particular lineup, but when we look at the 65, you can see that because that's such a small distance from 61 compared to the range on this chart, you're pretty much looking at a point in which this doji is definitely sitting right at that point, absolutely critical area. You could see the market trade through here, which is what we're anticipating. My belief is that we'll probably see the market go to 1,000. However, there is the probability, although a small probability in my opinion, that we could see this be our point of support and the market take off from there. And that would be really the last remaining island, let's say, that we could have any kind of a bullish model. Of course, this market could go to 1,000 after the kinds of moves that it has seen. But as I said, this is a very, very critical area, and it is going to give us a boatload of information by whether or not it's actually able to hold this particular price point. So traders, my recommendation is obviously maintain your current short position in gold, maintain your current stop. Quick look at the dollar. You can see that that's trading up about 65 points on the day, 98.25. You can see that it has overcome what we were looking at as a resistance area at 97.92, roughly in this area. And the 97.92, of course, was a 38% retracement. The chart that we're looking at has got dollar on the top, euro on the bottom. You can see that we are not quite at support yet in the euro, which we are pegging at 108. 1089 is where we're pegging current support. We have broken through the resistance in gold. We have not broken through support yet in the euro. We'll see how that kind of unfolds. And once again, simply maintain our positions as we go into the final day of the FOMC meeting tomorrow. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow after the FOMC meeting has its press conference. Bye-bye.